Welcome to Tampa Home Talk with your host, native Tampa real estate girl, Katrina Madewell, a full-time, passionate, out-of-the-box thinker, love for home ownership kind of realtor with over 21 years of combined mortgage and real estate experience. Tune in every week at this time for expert advice on everything you need to know about home ownership, finance, maintaining great credit, building wealth, and making your everyday life better, and how you can be financially successful today and tomorrow. Remember, love where you live or let Katrina fix it. Now, here's your host of Tampa Home Talk, Katrina Madewell.
Good afternoon. Thank you so much for joining us here this Saturday afternoon, part of the Real Estate Radio Network. We're glad to have you here on 1340, 1350, and 1400. Really proud to announce a special guest today in studio, Aaron Davis. He's the president and CEO of Hillsboro Title. Long-time company, been around for 30 years, started here locally right in the Bay Area, was family-owned and operated, and has really just grown into this amazing organization. Thank you so much for joining us this afternoon, Aaron.
Well, thanks, Katrina, for having me. It's a pleasure.
So I would love to just introduce to the person listening right now, how did Hillsboro Title get started? Like, because your start is so great. It's not like, you know, corporate Wall Street, mainstream. It's really awesome.
Yeah, it was magic. It was Plant City, Florida. Way over East County, Hillsboro.
Which back then wasn't known for anything other than strawberries, right?
Strawberry fields at best. So my mom started the company 30 years ago. Matter of fact, it was in 1984, so this is our 30th year in business. She was about 25, 26 years old, working in the real estate department of the old Hillsboro Bank. And she was a teller, moved her way up into the real estate department, and then got involved in title. No one in their right mind grows up to want to be a title agent, so you just kind of always fall into it.
We were talking about this before the show, how people don't even really know what title insurance is.
No one knows what we do for a living, so and that's just fine. That limits the competition. So she branched out. She worked for a title agency for a couple of years, and then realized that she's got that entrepreneurial spirit. So she started up Hillsboro Title in the old Sunshine State Federal Savings and Loan upstairs with, you know, a handful of files and herself.
Now, I know that you probably started out in the office, in diapers?
Pretty much about 7. That's what me and my brother both joke. I got my start in title at 9, and he got at 7. My first job was picking staples out of the carpet and refilling all the paperclip jars.
And so how did you guys progress into that? Like, what kind of stuff did Mom have you doing in the office?
Oh, man. Well, you know, back then it was kind of like old school title. So you've got
much easier than it is today.
Yeah. Well, it's a lot more work back then because you had to hand balance everything.
Oh, yeah.
It was all ticker tapes and typewriters, hand typed everything. The records aren't online like they are today. So we had physical plant, abstracts of title and plant material. So, our jobs were like, filing away the old microfiche. And the old microfiche readers, so we'd have to file those away. The clerk's indexes came on tape reels, so we had to put them in order. Put them back in their box and put them in order. Stack files, just menial tasks for a bunch of kids. Technology
is just crazy the way that it's advanced. Because for those of you listening, if you don't know much about me, I'm Katrina Madewell, your host I'm with Charles Ruttenberg Realty. I host Tampa Home Talk, and I have for about the last 7 or 8 months. And I come from the mortgage background, and it was a lot like that. We had the 3-part 1003s, which are the loan applications, the white, the yellow, and the pink. And if you mess up, you had to start over.
Which
is probably, you guys are probably hand typing HUDs back then.
It was hand typing HUDs. It was hand balancing HUDs. So you had to physically add up everything and make sure it balanced out. All of our old policies were in triplicate. So you'd have, it was before the day and age of fax.
Yes.
So faxes, when we first came out, were that crappy thermal rolls, and the paper turned yellow and disappeared after a few years.
They didn't know that at first, remember?
No, they had no idea until we tried to go back and prove ourselves, a decade later and go, where'd my paper go?
It's black.
Oh, man, it's all gone. Great.
So fast forward to where you are today. I mean, you guys have, how many offices are we up to now?
We will, after tomorrow, we're proud to announce an acquisition tomorrow that'll put us at 14 offices across Tampa Bay. So, when we had just the one office in Plant City from 1984 up until about 2007, 2008. And then that's when I purchased the company for my mom and rolled the dice and took some chances. And in 2008, we had just the one office and 7 employees, and today 14 offices and over 100 employees.
That is crazy.
It's definitely a change.
Now, one of the things, like from my perspective, as an agent, that makes you guys different is the level of service that you always show up. Like your people show up and they're prepared to give that and go the extra mile. And systems are huge, and we have a lot of systems in our business too. And we do that for a reason. If you have that checklist and that that documented system, you're less likely to have things missed.
Yeah.
And in your business, that's super important, like mine.
It is. And I mean, just think of a real estate transaction as comparable to a legal case. I mean, all the documentation of what you have to have come through. I mean, we describe ourselves as the accountants of a real estate transaction. It was once described to us, it was the best description ever, is what do you guys do for a living? I said, we're the guys standing at the bottom of a mountain. When someone releases a snowball at the top of it, we're there at the bottom to catch the avalanche.
Yes, to say the least. You guys,
because you've got real estate agents, you've got lenders, you've got appraisals, you've got everything coming together to culminate at a 1-hour sit-down closing that everyone has worked months to get you there.
That's the thing I was going to say is, looking from the other side of the table, I imagine the clients probably think, oh, wow, these title people, they show up for an hour and they,
they're like, oh, you guys live the life. You just work for an hour and you make all this money. And it's like, well, especially now in the short sale world, we've been working on this file for a year.
Yes. I think when you break it down to an hourly rate, we'll be lucky if we make minimum wage at that point.
We're at about $3.12 an hour on short sales, I think.
So, I mean, you really have to have a love for what you do. It's the same thing in real estate. Like, you really have to have a passion. You have to show up. We love serving our buyers and our sellers. It's something we love to do. Home ownership is really, really important to us, which is a lot of the reason why I started the show. When I got approached originally by Real Estate Radio Network to launch a radio show, Tampa Home Talk, we really said, okay, so who is our target audience? Like, why are we doing the show? And people just endured so much change over the last several years with the housing economy and the mortgage meltdown and just the overall economy. Mm-hmm. And it's taken a huge turn. And we noticed a lot of people having bumps in their credit and just a lot of bruises along the way. And we thought, wow, people need so much more than just a real estate agent to show up and show them a couple properties and, and collect a check. And for us, it's a lot more than that, like it is you guys.
It is such I tell this to a lot of folks, is the people that are left in the industry, whether it be real estate, mortgage, or title, are the professionals of the professionals.
Yes.
Because we've endured so much and have been through a lot. And quite frankly, the barriers to entry, the professionalism, the licensing, it's all higher than it ever has been before in the past.
That's right. Only the cream of the crop is left. You're listening to Tampa Home Talk. This is your host, Katrina Madewell, with Charles Ruttenberg Realty. We have Aaron Davis here in studio, CEO of Hillsboro Title. We'll be back in just a minute to finish this conversation. Make sure you stick around because we're going to tell you about a lot of HUD changes coming up in June. Whether you want to buy or sell in the next 6 months, you won't want to miss it. Welcome back to Tampa Home Talk. This is your host, Katrina Madewell. Thank you so much for sticking around with us today, this Saturday afternoon. Whether you're in the car, you're in between appointments, or just having fun at the beach, if you missed any part of today's show, you'll want to check it out on the web or via podcast. Just search for Tampa Home Talk, and you'll be able to get the full scoop and anything you might have missed from the earlier part of our show. In today's studio, we have Aaron Davis, CEO of Hillsboro Title, longtime native Tampa guy, for lack of better words, General Tampa Bay, right? Which
General Tampa Bay,
3 counties.
Yep.
And just an amazing story of how Hillsboro Title got started. Your mom founded the company. Fast forward, here you are 30 years later.
Yep, and there we go. As I said, no one wants to be a title agent when they grow up. They're forced to.
you kind of get roped into it. So what makes, well, let's back up. What is title insurance? Like if I'm just the layperson and I'm going to the beach and I'm trying to learn something new today because I'm listening to talk radio.
I have no idea.
And you're thinking, what's title insurance? Well, you guys are different than a normal premium because you don't renew. It's
so, for the layperson, it's very difficult to understand. And we try to tell folks this all the time, is that the traditional insurance is there in case something happens. So whether it be a life insurance policy is there to protect you in the case of death. Health insurance is there to protect you in the case of a future illness. Title insurance protects you from the past. Title insurance protects you of what's happened over the course of the last 100 years. Was there any liens or judgments or easements or claims on your land that could affect you going forward? So title insurance is issued from today, the day you close and take possession, backwards to the beginning of time.
And it's 100 years or forever, or?
Typically a search goes back 30 years. I mean, the statutes are all written so that anything that happened beyond that, there's nothing really that can be done. But, we've had, you could take a search back to the Spanish land grants, and, there's an old joke that, take you back to England and back to God, granting land in the first place. So
it's just interesting because, like you say, it's as opposed to regular insurance, any other type of insurance, that's a what if. Yeah. This is a what when. Like what might have happened in the past when whatever transferred, conveyed, sold.
Yeah, and that's what the example is as the good old boy back before title insurance, it was it's a trust and a handshake, and I'm selling you my house, and I promise you there's nothing wrong with it.
Right.
And and I'll use the example that I promise you there's nothing wrong with it. Give me your $100,000. And all of a sudden, I forgot to tell you, I had 2 mortgages, an IRS tax lien, child support liens, and I didn't own the house anyway because my wife got in the divorce. Which
in this day and age, we see it all. And we had some really fun conversations about some fraud that happens. We'll touch on that maybe in the next segment. But so for right now, what makes Hillsboro Title different than the average title agency? Or let's say they're buying a Fannie Mae foreclosure and the bank's picking the title insurance. We can tell you all those horror stories, but
well, God bless them first, right?
Yeah. Hopefully they get clear title.
Yeah. So what in general, it's I compare our scenarios, our title insurance carriers and agents, kind of like, we'll just say Progressive car insurance. Progressive car insurance you can buy online at progressive.com, or you can use Bob's Insurance Agency, who sells Progressive Insurance. The difference is it's typically not cost, it's service. So the same thing can be said.
And I just want to chime in on that because in your business, that is huge. And let me tell you why it's huge. If you're listening right now and you own a property, I just want you to think if you purchase that property at month end or maybe even a Friday afternoon, if it hasn't happened to you, I guarantee you it's happened to somebody that you know. Mm-hmm. And, you have somebody waiting around in the title company office until 5 o'clock in the evening to be told that they don't have funding and they're not going to be able to get their keys.
Yeah. It's trying, from a direct standpoint and an agency standpoint. We are an agent. We carry multiple carriers, so we have 7 underwriters. So that's I think that's the most in the state of Florida.
Which that's huge. I mean, a lot of title companies have one, maybe two,
and there is a difference between the different underwriters.
And so if anything happens, like even let's say they get a bad employee, that something happened with their escrow account or whatever, their underwriter could put a freeze on their operations.
Yeah.
And that would totally cease your U-Haul that's packed up, ready to move in.
Yeah. We had that back in the 06, 07, 08 crashes. I mean, banks were folding left and right. Title insurance agents were, they were it was in chaos and shambles, and lenders' checks were bouncing. A lender's check would come in for $200,000 to purchase the home, and we're dispersing funds, and all of a sudden that check bounces. You're like, oh crap!
Or you'd call to get a funding number, and no one was answering. You're like, where'd the bank go?
Where did ABC Lender go?
They're on the implode list. Did you check that?
MIimplode.com. I check that every single day to see who I shouldn't fund today.
Oh gosh, our industry has taken such a crazy, just left turn into the Twilight Zone and kind of loop back around. Yeah. Now with a lot more regulation, we're going to talk about some of that because there's some huge changes coming up to what we call the HUD 1 or the settlement statement. It's what we've always called it for as long as I can remember.
Yep, not any longer.
There's going to be some changes, and we're going to tell you about that coming up in one of our other segments. So do title companies charge different fees?
They do. So title insurance varies state to state. So we'll just talk about Florida. That's where we're at. The title insurance rate is a set rate. It's promulgated. It's set by the state of Florida. It's $5.75 per 1,000 up to 100,000, and then $5 per 1,000 above 100,000. So that is the set rate. Now, there will be variable fees, and that's where it can vary from title company to title company. So you typically have a closing fee. You have a fee for a title search, so that's a product that we have to obtain. And then nowadays, you have a municipal lien search fee that is a part of title.
That's new. We want to touch on that and explain that and just kind of break that down a little bit more? Because I think even when that came up, a lot of us as agents were like, we're doing what? We've never heard of that before.
Yeah, and I'll tell you, most title agents probably, even the change went into effect last September for the new contracts. And the new contracts call for municipal lien searches to be looked at. So traditionally, a title company would search items of public record. And items of public record are the public records, the official record books, liens, judgments, mortgages, that sort of thing. Municipal liens are different. Those are like water bill. I call them ticky-tack bills. So you got a ticky-tack water bill. You got a ticky-tack unrecorded homeowners association.
Where did ticky-tack come from?
I just said, it's annoyances. It's yes. Like a buyer can now get hit with a seller's $30 water bill. In the past, the county or the city may have forgiven that,
or collected it from the homeowner, or the prior homeowner,
at the homeowner. Right? But let's just let's be honest. Today there's a lot of short sale, a lot of default, a lot of foreclosure. You sign documentation at the time of closing saying, yes, I'm an honest person and I'm going to pay all my bills, including that last utility bill and that last water on the way out. Well, then you find out that they didn't do it. The buyer goes to turn the water on and they go, oh, well, by the way, you owe the seller's outstanding $50 water bill. It's an annoyance. It's $50. Is it a deal breaker? No, but someone's going to be mad about that.
Yeah, especially if it's a Friday afternoon and they were planning to sleep in their new home over the weekend.
Yeah, I mean, it's so it's unfair. So those are items that used to the state, the county, the city used to be flush with cash, and they didn't have to collect $30 or $40. Well, now they're all broke. So they're looking to collect money.
Everything's tight.
Absolutely.
They just trimmed all the fat. There's no fat left.
And now they're like, you know what? We're going to go ahead and charge that buyer for the seller's old water bill, or we're not going to turn the water on. So you got that. You got permits. You've got all these other things that have never before been public record. So what I say,
they're still really not, right? You have to still track down that info.
You got to either fax in to get it. Permits are mostly online. You can get permits. Those. You've got some other items, and that's what I say. It's the definition of public record has changed.
It has.
That used to be what you can find in the official records. My new definition of public record is anything that you can Google. Because that's what you're going to find. Oh, there's an open permit. There's all these things that no one had to look for before, and now we have to.
Well, there's a lot of little nuances with regards to the contract, and I call you guys the gatekeepers, right? You're the gatekeepers for the lender. You're the gatekeepers for the seller or the buyer. It's your job to know that contract inside and out and make sure that you're following all those provisions.
Yeah. And there's about, right now, there's about 4 different contract versions that are being used. There's the old FAR 10, there's the CRSP 12, the CRSP 13, and then now the new FAR 13, we call it, FAR Revision 2. So you've got all these versions. So you've got, and these contracts, I mean, they're 10 to 15 pages with all the riders and everything that go along with them. So you got a lot to know.
Aaron's referring to the different types of contracts, which we'll get into in a few minutes, and I'll tell you why those contracts actually get changed. And we'll also go into the top 10 things you need to know before you ever buy a property and you get title insurance. Whether you're paying cash or getting a loan, it doesn't matter, but especially if you're paying cash. Yeah. You want to stick around and make sure you hear what we have to say next. We're also going to tell you about the changes through the HUD 1, the settlement statement, and all those things coming up in the future. This is Katrina, host of Tampa Home Talk. We'll be back in just a minute. Welcome back to Tampa Home Talk. This is your host, Katrina Madewell with Charles Rutenberg Realty. Very pleased to announce my special guest here in studio, Aaron Davis. He's the owner and CEO of Hillsboro Title. Thanks for joining us today.
Well, thanks for having me. It's a pleasure.
If you missed any part of today's show, you're going to want to check it out on the web or via podcast. Just search for Tampa Home Talk, and the podcast will come up, as will our Facebook page, our Twitter handle, and our website. And we'll post all of our prior shows there, so if you missed any part of the show, you can catch it out in its entirety there. We were talking about some of the things with regards to title insurance and what it is and why you have to have it and why it's important and all of those little things in between. Yeah. But where we left off in the last segment, we were talking about contracts and you guys having to know all those different versions of the contracts and all the variations. And, you know, the way the real estate contracts work is, you know, we probably should be using the most up-to-date one, but I think people just kind of get stuck in their habit and they really need to be familiar with all of them. But essentially, anytime something happens, like I'll use, for example, when short sales were kind of like the buzz and a lot of people didn't know about them. Like there wasn't even a short sale addendum. No. When we first started doing them, I had to hand type that stuff out in a little writer because nobody knew what a short sale was. Yeah. And so one of the things, for example, with the first variation of that writer that came out, which is the little extra thing with the contract, that's what a writer is, was none of the clock would start ticking, including the escrow deposit, until you got bank approval. And sometimes that would take 6 months, 12 months. I mean, sometimes it still does, but the process is a lot better now. But what would happen is, you know, these poor sellers that were in default that would try to do the right thing and sell their home and, you know, do right by the bank versus just walking away and handing them the keys, they would essentially get stuck with this buyer that had already moved on to another property because it was a good deal at the time, but then they saw another opportunity come up they didn't want to miss out. Yeah. And the poor sellers kind of left holding the bag, you know, and their clock might be ticking for foreclosure. Yeah. So one of the changes they made to that addendum was that the initial deposit's due at the time that the contract is executed, which is good because the buyer should have some skin in the game too. It's going to make them stay, you know,
stay with that property because, like you said, when it first started happening, they were just writing in, you know, a $500 deposit. Well, fine, I'll walk away from the 500 because the market's getting better or the market's getting worse, whatever it may be. So, and one of the things too, I mean, I know some buyers don't like it, but I try to explain it from both sides of the coin and representing buyers and sellers. I think we do that. You know, you try to turn around and say, well, what if you were the seller and you were putting your house on the market and you were trying to avoid foreclosure because you lost your job or whatever? Would you want to waste all this time with a buyer that wasn't serious and didn't want to wait? Yeah. You know, and on the same token, when we represent the buyers, I don't like them putting a huge deposit down because we actually had a case in a short sale where the owner just disappeared. They just said, forget it. We're tired of cooperating. We don't want to do this anymore. We're done providing the bank with pay stubs and bank statements and all this stuff. So they disappear. And here we've got a buyer, you know, with a pretty hefty deposit because she's paying cash. And now, I mean, how long is that going to sit in escrow, Aaron? If you can't get a release and cancellation? Yeah, it takes a while, and I'll tell you, I mean, that's one of the things that we've made a change to, you know, in the last handful of years is we now have 3 real estate attorneys on staff. So with our real estate attorneys on staff, we settle escrow disputes. Do you? So yeah, that's something that most title agents don't have the attorney representation, you know, there. So we'll sit there and sit, you know, have a chat with both buyer and seller and the parties and say, look, we can determine that this was done wrong or that was done wrong. So we'll make a determination if they like it. If they don't like it, well, fight us. I got attorneys on staff. Let's go. So they're going to give them like a probability outcome, right? They like will, based on what we have, this is what you're looking at. And that would make both parties probably rethink it, right? Exactly. They'll say, clearly, this was your fault, Mr. Seller. You did not, you did not perform to the terms of the contract. You were supposed to provide all this information for the short sale or whatever, and you didn't. So therefore, you're at a loss here. Mm-hmm. You know, so we'll make those determinations. I mean, not every title company does. And that's huge. You guys, I mean, the service just, I can't rave enough about it. And I know probably half your staff. we've amassed the all-star team of title. And just to give the average, you know, the average listener the comparison, I think our next closest title agency may have, 20 employees. And so we're at over 100 altogether. So, I mean, we are clearly the largest agency, and we've collected a great number of people, and we've replicated, my mom's essence, of title caring about a transaction and, seeing the smiling faces, when a buyer gets a set of keys, nothing makes you feel better. And I think that's what, at the end of the day, we all do this because it's providing a great service.
You have to have a love for that, and I remember so badly when I wanted to buy my first house. I was like 18 years old. And I remember my mom bought a house. My sister and I were teenagers before that happened. So, when I can make that happen for a buyer, that it's their first time home and they're giddy, or even a seller that's buying a larger, more spacious home because they've got some kids,
Yeah.
You have kids, it doesn't take long to outgrow the place.
You will, whatever you move into, you will fill up.
For sure. So let's talk about some of the inventory just to give you guys an idea. So when you look at like Pasco, Pinellas, Hillsboro, right now there's 17,590 transactions available, or houses available to purchase, which is not a huge number for 3 counties, considering right now we have over 10,000 of those pending and under contract. So we're basically about a 4-month supply of inventory, and it's a lot of the hedge funds are helping us out. We talked about this over the break because they're coming in, they're paying cash and cleaning up a lot of the mess.
Yeah. They came in over the last 2 years and have just, I think 3 years ago, we were looking at probably 20 months of inventory.
Yes. We had almost 2 years, I think.
Almost 2 years of inventory. Now down, and they say that a healthy market is at 6 months.
That's normal. Yes. That's a normal, healthy market.
So right now we're at a little bit of a shortage. Some of those delays are caused from all these, backlog of foreclosures that are occurring. Florida in particular has got a problem, and it's the way it's called that we're a judicial foreclosure state.
Yes.
And so to give you an example,
I love to talk about lien theory versus title theory.
It's total different. And I'll just use Arizona. Arizona has cleared out their foreclosure inventory. The average foreclosure in Arizona is like 90 days,
which should be the norm. Really, it is.
Right. Florida, it's almost 800 days.
Yeah.
The average foreclosure is almost 3 years. And that's ridiculous.
It's not normal,
It's not
so
normal,
if you're
and
listening, it's not, and you say, oh, so-and-so's been in their house for 2 years or 5 years and they've made a mortgage payment. It doesn't happen. It's because of a lot of stuff that happened in the past.
Yes, it's all the note movement, everything else. But there's
been
laws in Florida that change. That's why OJ still has a house here. The laws in Florida protect people.
Yes, for sure. So let's talk about some of the 10 things that a buyer especially, right, should ever need to know if they, when they're getting a title insurance policy, because let's face it protects them against clear marketable title, so that if they have any issues or, some of these crazy cases, like let's use that example that we talked about before the show started. Remember we were talking about the crazy guy that was forging the deeds for the banks? Oh
man. Yeah, that was not, that was not cool of him at all. We in title, your success and your success is based on your accuracy. So for a title company to say they've had no claims, that means they've done a really good job, that nothing bad has happened.
Yeah.
They
all their I's are dotted, their T's are crossed, all their paperwork's in order.
They've done everything the right way. And so a claim occurs when something's done the wrong way. Say I'm selling Katrina my house and I have 2 mortgages and the title company only finds 1. And then I just, kind of go ahead and close. And you just inherited my second mortgage. That results in a title claim. That's the reason title insurance is there. I have a judgment against me. All of these things that can cloud title and cause harm, attach and follow. That's what a title insurance has to cover. That's a claim. So we've had a rash of forgeries. Fraud is at an all-time high. We've had a rash of forgeries hit
all
the state.
These empty properties, the criminals are taking advantage of that, whether they're squatting or whatever.
They're finding the way to identify properties that a bank may not even know they own yet, and then they've started forging deeds. And so we got hit with 2 of those. So to not have a claim in 15 years and then 2 in 30 days was just crazy.
And like you're saying, the criminals obviously had to take a lot of steps to get to that place. And it wasn't even anything that you missed. It was just flat out fraud.
These guys stole a notary seal. It was all the bad things that could possibly happen, and they knew the tricks of the trade. And these guys, they probably, made off with tens of millions of dollars.
So imagine, if you're the buyer or the seller on the other end of that, and you might be thinking, yeah, whatever, I don't know what title insurance is, or I'm not moving or whatever. Hopefully you put this little bug in your ear so that the next time you go to buy or sell a property, you'll reach out to us here at Tampa Home Talk. and say, hey, you have that guy Aaron Davis in studio, and he was talking about title insurance and something about deeds, and can you tell me what that is again?
Yep, no one knows what we do for a living, but I'm here to talk about title insurance if you ever need it.
So let's go into at least a couple of those things out of the list of 10, because there are some things that are really important that you could probably look at as a buyer just to make sure. Like one thing being the exceptions, right? That's huge.
Yeah. So in a policy, just like if I'm a health insurance carrier, and I'm going to write you a health insurance policy. Well, if you've got a pre-existing condition, I'm not going to cover that, or I may cover it and charge you more for it. So in title, there are pre-existing conditions. What pre-existing conditions are is, well, there might be deed restrictions. There may be an easement there. There may be, other things of public record that already exist. So those are exceptions. We're not going to cover those items because they're already there. We can't help that. So what we see going on out there now is there's exceptions being made to weird things that happen. So some weird things that were happening over the last 5 years. Everyone heard about the robo-signing scandal.
Yes.
So I'm seeing some title insurance policies surface that have exception to some of those types of transactions that robo-signing may have occurred. So you'll have some odd exceptions these days that say, all right, we'll cover title. We got your back. Unless it was closed, during this period of time and it was under these circumstances.
Which is when all the crap happened. So it's a little bit risky. It's kind of like, I guess, from an insurance perspective, if the house was built in 2006 and it has Chinese drywall, it'd be like the insurance company saying, sorry, we're not going to cover it.
Yeah, you're picking and choosing your selective coverages. So
I mean, if you're a buyer, I would say really pay attention to that schedule, because there's, Schedule A, Schedule B. Yeah, B continued is usually where your exceptions are?
Yeah,
correct?
It's Schedule B2 are usually your exceptions. B1's your requirements. So, I mean, all of these are just the inserts of a policy. And that's, things that we're doing. We teach these classes, so we teach it to the realtors, we teach it to lenders, and we teach it to the general public. We're trying to educate folks about what we do.
And for a title company to do that, you guys are really stepping up. You're stepping up outside of your game because it's important, right? I mean, just like consumers, we want them to have knowledge.
Well, we're all trying to give the consumer transparency. That's the reason for all of these changes is more and more transparency. So with the lenders, the old yield spread premiums and whatnot, no one really understood that. So they're trying to say, we want you to understand this transaction. We want you to understand in banking what compound interest is and how it works. We want you to understand how we get paid for a living. So we're trying to educate the public the best that we can about what we do, how we do it, and why we earn a living, why we all earn a living. And like you said earlier, you break down the amount of work that goes into a file by hour, some of us make less than minimum wage.
Exactly. I think a lot of people don't realize all the moving parts that go behind a real estate transaction. It is a lot of things. And like you said, a lot of the changes are to show transparency. There's nothing wrong with making a living, but just, hey, be upfront about it. Like, Absolutely. Tell the truth, do what you say you're going to do. So we come back in just a minute. We're going to talk about some of the changes to the HUD-1, the settlement statement, the one with all the numbers on it and that type of stuff. And you said June 2015, right, is when that's supposed to go into effect. So we're going to go from numbers to letters, and there's a whole bunch of craziness going on there. So it's going to be really important you educate yourself. This is Katrina Madewell, your host of Tampa Home Talk. If you missed any part of today's show or you want to catch up the rest of what we have to say and you have to get out of the car now, just search for us on TampaHometalk.com. And across the web, you can find us on Facebook, Twitter, and also all of our shows via a podcast. We'll be back in just a minute with Aaron Davis, Hillsboro Title. We're going to get into some of those things you need to know moving forward over the next couple years. Back in just a minute. Welcome back. You're listening to Tampa Home Talk. And this is your host, Katrina Madewell with Charles Ruttenberg Realty. Very pleased to have in studio today my special guest, Aaron Davis, the CEO and owner of Hillsboro Title. Several offices across the Bay Area, from what's your saying, from Pasco to...
From Polk to the Gulf, Pasco to Manatee.
There you go. If you're in somewhere in one of those areas, they definitely got you covered. They've got a title office near you. We've had a great show today, really just talking about title insurance and what it is and how it affects you. And I know I've been talking about all the changes that are going to take place over the next year and a half, couple years. Yep. But these are going to be important, because if you ever go to a closing or a settlement statement, and I'm sure it's going to happen, there'll be some agent that has no idea that new.
Yeah, the new HUD. It's not a HUD anymore. So
It's called, what's the new name of that?
The closing disclosure statement.
So that's what we have always called the HUD 1 or settlement statement.
Yeah,
it's going to be different. It's going to have a lot of more pages. It's going to have some letters.
Yeah, and it's just a total change of vernacular. So something if you've always called it a car, and then all of a sudden they renamed the car something else, you're gonna be confused. So the HUD statement is the Department of Housing and Urban Development. HUD is HUD. Our industries have been regulated by HUD and RESPA for forever, 20 years, 20, 30 years, who knows? And so there was a financial reform bill put out in 2009 or 10, the Dodd-Frank Act, which now everyone is starting to hear more and more about Dodd-Frank. Dodd-Frank put into place a new consumer protection division called the CFPB, the Consumer Financial Protection Bureau. So CFPB is now the boss. They're the boss of HUD. They're the boss of RESPA. So they didn't think that the forms were clear enough to the consumers.
The crazy part is, like, all this started because a politician bought a house.
Yes.
Didn't understand the process, thought the HUD one was too complex, which I don't know why his mortgage person or his agent couldn't break that down to him and explain it.
Quite frankly, I thought the one 10 years ago was the easiest one to explain. It was 2 pages.
Right.
Now, so this new closing disclosure statement comes out in June of 2015. It's now 6 pages long. The previous one was put out in 2011. It was 4 pages long, and the previous one to 2011 was 2 pages. So I personally thought the 2-page was pretty simple.
It was, because it was a simple, like, here's your closing costs, here's your stuff. It was all lumped together by, your taxes were in one spot.
Yeah.
Your lender fees were in one spot, just really lumped together. And then it was like, okay, here's everything you need to buy the house, from the purchase price to your part of taxes and all of your stuff.
Yeah.
And then your subtractions.
It was simple. It was a simple accounting statement.
So you're
of
saying
debits and credits.
The new HUD's going to confuse our CPAs?
Oh my Lord! Well, it combines like 5 different forms into one. And I'm a guy. We don't multitask very well. We're simple cavemen. I like to look at one piece of paper and then move on to the next piece of paper. But if you slap 6 pieces in front of me, I just get discouraged. So that's what I feel is like this 6-pager is just going to confuse people more.
So what are some of the changes in that? Like, how is that whole thing broken down now? And what are some of the things that a buyer and a seller would need to know looking at that?
Yeah. So first of all, the entire format changed. It doesn't even look close to what we have today. So at least the 2011 change a couple of years ago, it had the same essence. It just added a few more pieces. But like the realtors, the realtors commission section is the 700 series, and then the lenders is the 800, and then title is 1100. Those numbers are gone. So now it's replaced with A, B, C, D, and so
it's not even like the when they were changing the exit numbers on the interstate, they would put the new exit number and then old 47.
Oh, yeah. No. So now real estate commissions H05, title insurance is H07. It doesn't even make sense anymore. The biggest change, it incorporates a whole lot of different aspects of closing into one statement, including all of your payment information if it's a variable loan. But then this one includes APR and truth in lending on the settlement statement.
Which is crazy because nobody understands APR. Like, we try to explain this over and over again.
We try.
It's basically the cost of borrowing money. And you can't get hung up on that because your note rate is what you actually pay interest on.
Yeah, right about that. Right about the time when you start to try to explain APR until when people go cross-eyed at the table and go, I don't even know what you're talking about. Just give it. I'll sign it. I want the house. Give it to me. So.
It's the way it goes. Unless you're paying cash, he who has the money makes the rules. So.
Yeah, and that's what we say. The mortgage is 21 pages long. All of everything in this mortgage is to protect the lender from you doing something bad. So you promise to be a good person, sign here, you get your money.
Yeah. So they just want their money, They don't want you to deed the property to someone else or store nuclear bombs on it or crazy stuff.
Don't do something, make sure you pay your taxes, be a good person, and don't default to government, and you'll keep your house.
So let's talk about title vesting, because I wanted to touch on that before we run out of time.
Yeah.
And a lot of people are like, huh? And I see this come over a lot on the, like when we sell like a Fannie Mae or a Freddie Mac or bank-owned type property, they send like these 5-page worksheets now that they want the buyer to fill out, which is all well and good, except for I don't think the typical person knows about title and how to hold it. And
yeah, and it's something, most real estate professionals, just always need to be wary of, because vesting has repercussions. So most real estate professionals will say you need to talk to an attorney, and that's why we have 3 attorneys on staff. So if you need to consult an attorney to determine how to take title. So there's 3 different ways to take title typically.
Now, the attorneys, as long as someone's using Hillsboro Title, they can call them and answer those questions.
If they're my client,
for no charge.
If they're my client, call me anyway. You
Okay.
know, so we'll always help out. So so typically, if it's 2 people, so if it's me, let's just say that me and Katrina are married, we're going to take title as husband and wife. And that way, if something happens to me, title then flows through to Katrina. Well, now let's say that me and Katrina are not married and we're just, two people. We could take title as tenants in common. So then if something happens to me, my interest does not go to Katrina, it goes to my kids.
Gotcha.
So it goes to my heirs. So that's what we call tenants in common. Husband and wife is called tenancy by the entireties. So, or joint tenants with rights of survivorship. Those are both, used quite often.
And there's so many layers of that. When you go to buy a house, you really should be thinking about those things and what happens to me, like how am I holding title? Because really, you're not allowed, like if you have a mortgage, you're not allowed to change the deeding structure on that.
Sure, because vesting, the vesting, if the vesting changes, it can change the entire way that the transaction or the mortgage is structured. So, and I'll use a great example. We've got an office in Sun City Center. It's a retirement community. A lot of times it's his kids and her kids, and then they get married later in life. But the intent was not to join their estates together. His kids want his will, her kids want hers. And so they might be married, but we may not want them to take title as husband and wife.
Gotcha.
So there's important little things to know.
So certainly all those little things, there's a wealth of knowledge out there that Hillsboro Title can give you, and they can answer a lot of these general questions, maybe saving you some additional attorney's fees. And they're really just to help you understand so that hopefully you don't have these issues later if you're the one left and the other spouse has passed or
there's
your
all
partner.
We've seen it all. We've literally seen it all. And there's some very sad things that can occur because of improper title vesting.
So you're listening to Tampa Home Talk. This is your host, Katrina Madewell of Charles Ruttenberg Realty. Really proud to have here in studio Aaron Davis, which is CEO of Hillsboro Title. I appreciate you bringing your wealth of knowledge.
It's a wealth of useful information. I'll provide it anytime.
And we have a lot of great properties for sale. I'm happy to report that from the last time we were here, and we're here every Thursday and Saturday at 5 p.m., we have sold almost everything that we have under contract or had listed. It's under contract now. We do have one left that's about 4,000 square feet in the Ruskin area, right by where that Amazon plant is being built for only $250,000. It's almost 4,000 square feet.
You hear that, Amazon executives?
That's right. Reach out. We got your hookup here. This is Katrina Madewell, host of Tampa Home Talk. Check out any part of our show if you missed it on the web at tampahometalk.com. We're also on Facebook, Twitter, and all of our shows are available by podcast. So we'll be here every Thursday and Saturday at 5 p.m. We do hope you come back. We'll be on 1340, 1350, and 1400, and also by video, Tan Talk. Thanks so much for joining us today, and we'll be back next week. But for this week, we are out.
It's time to think, it's time to